Yet another bounce off this brand new trend line. Let me remind everyone that this is one of the most hated and ignored international banking conglomerates, which has already launched in-house one of the most vibrant digital payment apps and one of the few cryptocurrency platforms actually used by multiple country-level central banks. What I'm saying is, if this momentum is picking up, there's really a lot of distance yet for this to run. Zooming back to the full year, there really is no technical resistance to speak of. Welcome to Value Validate, the official YouTube channel of Sage Seeds Capital. In this video, I will be journaling the technical developments of the latest 3 stocks we have produced deep dives for on this channel. All 3 of the stocks this time are all financials. Our firm and proprietary Sage Seeds Artificial Intelligence have been loving financials, seeing them as particularly undervalued relative to the general market. And it's not just Grupo Cibest that has been marking up quite consistently throughout the year of 2025. In particular, at the end of the video, I am going to share the exact trades the firm took on what I would consider the most efficient American bank of the entire decade. That is a lesser known name, Bankwell Financial Group. Stick around to find out exactly what I'm talking about there. Now, since mid-September-ish, Grupo Cibest has seen an acceleration in its momentum. The stock is no longer just going up, it's going up faster and faster. But very importantly, this new steeper upwards channel has been being created on lesser volume. That tells me that many Wall Street institutional firms are actually not participating in this, most likely electing to see how this plays out, if not downright ignoring this stock still. Now remember, we covered is in that deep dive that right after the earnings report in August, Grupo Cibest pulled a god-tier strategic move. I am going to paraphrase what the management said, but my interpretation was, if American and European investors still aren't paying attention to us, we're going to pivot hard and start immediately issuing all our new bonds in the Singaporean stock exchange. On the day of that issuance, you can see it is the largest volume day almost of the entire year. This coincided with the very first day that Singaporean hedge funds were now seeing a big headline about this company, probably for the first time. And perhaps not a coincidence, the price has literally not threatened those prices that were seen on that day even once since that pivot. Now, like anything related to narratives, these things have a way of spreading slowly, much like our channel. So please take this opportunity to make sure you are liking the video, if not downright subscribing if you want to continue to see insights from our Sage Seeds AI every single month. So wrapping all this together, it's very likely that what we're living through is American hedge funds and now Singaporean hedge funds have very small feeler positions, and they're just letting this run for the time being. The good news is Grupo Cibest is clearly not being scalped, and with this depressed volume, it would be very surprising if any one of the big players were shorting this stock. Grupo Cibest seems like it's the definition of the neutral pile, which for such a massively undervalued global conglomerate is a very, very positive and monumental development.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
The bulk of this run-up is probably largely retail investors, meaning that this is not necessarily the safest stock that we could be in right now. Retail investors tend to be weaker hands, meaning that a pullback as far down as the bottom of this channel, which would be a quite significant pullback really, if it were to happen, would not necessarily be something unexpected. But for better or worse, institutional investors might get caught a little bit off guard with how quickly this momentum is picking up. Retail investors seem to be on their own carrying this higher. It would not surprise me to find out that there might actually be Latin American hedge funds making a play for this far earlier than any of the New York or Singapore investors have anticipated. Because of the relative sizes, I would still consider Latin American hedge funds to be quote unquote retail in terms of their ability to generally influence movements, but they could be doing a bit of a brilliant push right now, getting in on this and forcing the hand of Asian and American hedge funds to take this stock much more seriously. Next, we have Mercury General, which genuinely should be put in trader textbooks as the clear-cut example of a beautiful earnings bounce. I mean, just look at the doubt, the pessimism. The earnings come out, absolutely smashed expectations, of course, as we knew they would. And it's just the most beautiful march right up to the top of the channel. So where does that leave us? Yes, this company's price has been going up a lot. I believe it's pretty much doubled since April. And this has once again been happening largely without the participation of institutional investors. The volume has been noticeably low this whole year. Many of the large players are just completely dropping it when it comes to participating in the financial sector rally. But if only it were that simple, we wouldn't even really talk about it. Unfortunately, without the massive institutional support, these rallies are a lot more fragile than we typically like to see at Sage Seeds Capital. Now, the good news is that all three moving averages, the 20, 50, and 200 SMAs, are definitely tilted up on MCY again, meaning that we can officially call this a completed earnings bounce. Last month, when we were first absorbing the earnings bounce, it was still looking a little attractive for some people to distribute their shares, but we did not see that materialize, which is very, very good news for any long-term holders of Mercury General Corporation. Now, of course, we get into all the details in our deep dive video that explain why these earnings beats are so large and consistent. Mercury is able to raise prices while seeing its costs dramatically shift down. And even after doubling, this company definitely is still one of the most undervalued available. But a few developments since the deep dive video that I would like to bring up are dramatic outflows out of the private credit industry. Now, what does that have to do with this insurance company? Simply put, I want to warn you guys that insurance, more than any other financial subsector, is particularly exposed to any dangers and any, let's call it a depression or recession in private credit valuations. Pretty much no insurance company is immune. Mercury General has not been able to completely evade exposure to the private credit industry. Now, this is more of a storm rather than any sort of headwind, but still worth noting when the volume is consistently so low for Mercury, you now have what is a uncomfortably fragile uptrend and a potential near-term storm on the horizon. It's a bit of a shame because Mercury General does deserve a lot more love than it's been receiving for years now, but risks are risks. We're all here to manage risk. I wouldn't be able to journal my thoughts without bringing up that that's been a pretty large development over just the last couple of weeks. Now, finally, Bankwell Financial Group, as you see, it is in the midst of a significant brand new upwards channel, but it has been clearly ranging and I mean, look at this part, kind of ugly ranging at that. Zooming it back to the full year, it's now been 3 months since we posted the deep dive video on this stock, what I keep calling the most efficient banking stock in the United States. I'm now going to reveal the exact trades that Sage Seeds Capital took, not just because it's fun, but because transparency and excellence are what this channel is trying to be all about. Feel free to absolutely flame the decisions we made in the comments below. It all began in the last third of the month of July. Specifically, this very thin, low volume trigger bar on July 21st signaled to us that demand for the stock was officially increasing. That was our belief. And so we began a position at $38.35. We actually were unable to get enough volume for our desired initial position size. So the very next day at market open, we were able to cut a couple deals, and luckily enough, we finished the initial position with a second purchase at $37.99. The stock then immediately rushed back to its 50 SMA, making us, I didn't quite cry on this one. It was still just an initial feeler position, but if I hadn't have pulled away from the screen, I might have had a tear or two shed. Everything was fine though. That 50 SMA was respected. Stop loss was relatively safe at the end of the day. And luckily enough, an earnings bounce saved us, so to speak. And 2 days after the earnings, we actually began adding and scaling up our position. By the end of July, this was very much not a significant position in our portfolio, but it was almost immediately demanding some of our emotional bandwidth. Luckily, things actually did move quite fast. After another small little run up, by mid-August, we decided to begin buying again on the 13th the 14th, and the 15th. A little bit more ups and downs, but nothing nearly as scary as the initial pullback, until getting close to mid-September, we started to see things really pop off. Volume was now multiple times higher than it was when we first started buying, and we were feeling like the iron was hot, ready to become properly aggressive. So on September 9th, September 11th, September 12th, September 15th, we made additional purchases all throughout this little rally. This was now one of our top 3 holdings, and that's when things took a turn very much towards risk. It's worth considering, were we too aggressive during this rally? If you have an opinion on that, let me know in the comments, please. Beginning on the 19th, this to us looked like a natural place to buy again. However, at this point, we were rapidly ramping up our purchasing. Very significant purchases on the 19th, the 22nd after a weekend, the 24th, which especially looked to us like another trigger day. However, by September 30th, it became clear that what we had predicted was increased demand for the stock, leading to elevated volume, might have been more complex under the hood. Now, on September 30th, it had only been 2 of these big red days, but 2 things forced us to completely exit the position. First off is this first big red day actually happened with quite little volume. We don't love that because that was the first time where we had a screaming red flag. This day to us screamed demand and supply are actually not as unbalanced as we had been assuming the entire holding period prior. Now the gap down, while scary of course, wouldn't have scared us very much if we hadn't have been so aggressive during the month of September in ramping up our position. If we had bought less during the month of September, we probably could have maintained a more, let's say, gracious stop loss. And who knows, maybe we would have survived this pullback, although I really doubt it when you look at how ugly it got near the end of October. We'll never know now because we did sell right as it was crossing under the 20 SMA, perhaps more cautious than we generally tend to be. But I would argue without that demand surge being something credible, we really found ourselves in a highly vulnerable position. Our final exit price averaged at $44.10, which was quite an average profit for us on a risk-reward basis. We guaranteed the average profit and let the market do what the market was going to do. So there you have it, Sage Seeds, a pretty typical trade. We were extra nervous at the very beginning, extra aggressive right around the end. Of course, most of the buying we did in September, that hyper aggressive buying, ended up lowering our final profit. But by swallowing our pride and reacting quickly, we did protect what would be a pretty average profit level for us. And really, other than these videos, I've removed Bankwell from all of my watch lists. I really shouldn't do that. I probably will add it back right after I finish recording right now, but it's just too painful for me to look at. I don't want to remember how I felt at the end of September with respect to this stock. If you like these videos, especially this high level of transparency, please consider subscribing, sharing these videos with your friends, or dropping some of your YouTube hype. I'm still yet to know what a hyped video looks like, but I do know that every single one of you is given hype every week, and that our channel is definitely small enough to qualify for that hype if you are so feeling generous. Next month, we will be getting updates on Mercury General and Grupo Cibest, but also mixing in a exciting energy play, Gulfport Energy, an insanely attractive share buyback in my opinion. Thank you for watching, and see you, Sage Seeds.